Well, you can never say that the Federal Reserve isn't sneaky. With their skip of June interest rate hikes and 2 more supposedly in the bag, the market is decided it's calling the bluff. The question then becomes did we see the standard setup for a turn in markets? The usual sell-off into the announcement, the rally on Jerome's speech, and then the slight fade near the end into the after hours. Well, today we take a look at the 5 key takeaways plus the dot plot that we got from the Federal Reserve of what they're expecting to do and how it really translates for us as investors and traders moving forward. Don't go anywhere. This is a good one. So welcome back everyone to the Daily Show where we talk about the markets around the world. If it's your first time here, welcome to the community. Subscribe and smash that like button. We'll be covering macro, leading indicators, and of course the hottest charts. They're all coming your way. Let's begin with a share over on our Twitter, FX Evolution. 5.6% on the dot plot is the new terminal rate. This means basically the highest interest rate that's expected by the committee members. And you can see there are very little chance, at least at this stage, of rate cuts in 2023. Now, the market's basically priced out rate cuts, but what they haven't done is put any of the rate hikes in. Then you're seeing here 4.5% in 24, and of course, a terminal rate down the bottom at around 2.5% in later years. Now, what this did was it kind of caused the market to go initially down as they believed in the 2 new rate hikes, and then up during Jerome Powell's maybe a little bit useless speech. He actually called this particular meeting the skip. And then he said, oh, no, I shouldn't call it the skip. What we're going to be doing is, don't you worry, we're going to be paying attention to these markets and we'll be constantly looking at the data. We'll be making sure to, be dependent on that, et cetera, et cetera. The Fed really don't want financial markets to start thinking about rate cuts. You know, the best way of doing that, abolish the dot plot. That would be good. It would create indecision in the markets, some kind of uncertainty. And if there's one thing markets hate, it's uncertainty. Now, as we mentioned, basically doubts swiftly emerged about 2 rate hikes. As soon as Jerome was asked anything about July and actually putting in a rate hike, he said, oh, we're not going to commit to that. We're not going to do anything, blah, blah, blah. It becomes less clear that we're going to get 2 25 basis point hikes. And of course, every other thing was there was no decisions there. The market freaked out initially, and then it went, oh, wait a second. Okay, it's not as bad as we thought. Core PCE remains the most important bit of news. And if sticky inflation continues to be there, I would guess that the Fed does get these rate hikes in. And I'd actually say they probably will do it. And that's because we've used the other central banks around the world, being the RBA, Reserve Bank of Australia, and of course the Bank of Canada. And we know that in both of those cases, they have started to raise rates after pausing. Now, what have we seen? We've seen, of course, a pause now from the Federal Reserve, but it's likely there's still a little bit more work to be done. The markets currently are not pricing that in, and it is something that I would keep in mind. The 5th point is, of course, that basically Powell keeps going on about the banking and commercial real estate sector being all good. I don't think most of you guys believe that. Let's have a look at some of the bearish signals that we're starting to see here in markets as we extend through some pretty serious points. Of course, we have some of these theories. This 42 bar theory is pretty much coming in. We just saw the 42 bar play out. So basically, are we on a high? Well, based on quite a lot of history now, you could argue that we are at a significant turning point. This is just one of the many theories that we have up here. The second one is, of course, S&P 500 overbought based on the 50 moving average. I think that this is really important just to look at. What you're not saying here is that the thing is going to absolutely crash, but at least it needs what we call mean reversion. Now, I think we're in 7 straight days now above the 50-day. That puts us at an all-time record over the last basically 2 years. And in general, when we got readings like this, there were not many days before we got a significant turn in the markets. Do we have one yet? No. Could we be getting one? Very much it could happen, and we'll talk about that soon. Of course, PCC, put-call ratios continue to lengthen. This is a chart taken a few days ago, but it wouldn't be less. It'd be more at this stage as everyone jumps into the market. And really, it's pretty much what you've had to be doing. Going single stocks, grabbing some of those ones that tend to be the late market. We've talked about Intel. We've talked about PLTR. We've talked about Piton, SoFi. Congratulations, obviously, to SoFi traders. You got your second TP over the last 24 hours. And we know that PCC is entering what we call a strong sell. Why? Because in this case, we've got a very clear, huge standard deviation move on the call side. We also know that these particular weeks tend to be actually positive overall. Last 2 years in June, OPEX were negative. This one here is turning into a positive. So if we do get all of those hedges off, this is the most hedged week, remember, remaining in 2023. It opens the market to be potentially able to sell. And there are some interesting stats in Q3s and also the post-OPEX week. Only 10 up, 20 down over a 30-year period. Some interesting stats there. Extreme greed ticked 1 up. We're at 81 now. Very interesting. Of course, extreme greed, if you follow Warren Buffett, I guess you would say you got to be a little bit fearful at these points. And we'll get our new survey result as well, which I expect to be in the 30s. I wouldn't mind seeing some guesses down below of what you think it's going to be. I'm going to guess here. I guessed 32 last time, 33. It was 44.5, so I was pretty wrong. Let's go with a 36 from me. Let's see what you guys think. Closest to it, I'll feature you in the comments over the next 24 hours as we get that. Of course, we do know that survey reports and in general, anything to do with bull-bear spread is back in an extreme highs. It's the second highest reading we've seen in the last couple of years. And I tend to be very cautious around these periods. While I still would trade longs, I'm just going single stocks and sectors at this point. And indices, I'm waiting for turn signals. Have we got one yet? No. We exited bear market territory only about, week ago now. Generally, the next couple of weeks open themselves up to shorts. Here's some of the stats. Again, it's just statistics, so we're just playing that kind of game. You can see here that it's pretty damning actually for these events, and some of the things are lining up, but again, no turn yet. As an investor, if you're watching this channel, should you be terrified of markets right now? Probably not. I mean, overall, yes, you're probably trading at a bit above average, probably about 18.6 forward PE, but realistically, it's nowhere near as high as it was during that 2020-21 hike in the markets. And until it gets under, 16.5, 16, 15 a bit, as an investor anyway, I'm not that excited about buying back into these markets. Of course, different stocks, different opportunities. That's why it's, again, single stocks, not necessarily the index itself. Pre-election years theoretically have more to go. Generally, you will run through the middle of July or June into July, and then you'll see that Q3 sell. If you've been following pre-election presidential year kind of things, then generally you get that run, you get some sideways action, and you get a great back end of the year. So I think you should remember that when you're looking potentially at a sell-off that comes through either now, next couple of weeks, which is my expectation, and then, of course, into Q3. There could be a good turn there. Let's move over here to the major tech stocks, and they're still not making new highs. So realistically, what it is it's showing us there's some weakness here in what led us out of this kind of collapse. And we know that the moving average is well below. In fact, the weekly is sitting in this demand down here. So price is now extended away. Let's take the as of the close, around 16.8% away from the 20 moving average on the weekly, often considered mean reversion. It's something to keep in mind. In terms of the NASDAQ, was it doing better? Yes, it was than the Russell over the last 24 hours. The Russell didn't do very well to this idea of having a few more rate hikes. Even though the market didn't really believe it initially, the thing about it is that is pretty consistent with those moves. Over on Twitter, we shared that idea that during Powell days, it kind of does this. News comes out, rally off Powell, and then you see a sell-off into the close, usually with follow-through after markets. At the time of this recording, that's exactly the way it's actually playing out. Let's move over to the skew here, and you can see here we got some skew crush. That's good. We expect skew crush to continue this week as we take all of those hedges off. So remember, there are so many Wall Street hedges in this market right now. It is a massive options week expiration. And once those hedges come off, it opens up the possibility of certain things actually going up. Oh, VIX would be one of them. Look at this thing. It cannot catch a break. You cannot see volatility in this market. And a lot of that has to do with all of these calls having to come off. There's just a stack of them sitting there. It's a little bit different to the zero DTE strategy, but just remember here, that's an important one. Another one would be PCC, put call ratio. Now, did we see a switch here? Now, this one here is equities and indices. Well, the idea is, yes, we actually did. So we were down here in the lows, and now we've seen a switch back up. That's a good sign. Basically, you want that type of switch to be coming through from PCC. And when it does come through, it shows you that most likely we have trapped a nice amount of calls in. This is exactly what you want to be seeing with that skew change. Let's move over to the July expectations of interest rates. Yeah, it didn't really move. And it's the same kind of thing when we go forward. If we go to September of this year, you'll notice it's just sitting around 5.2. And then actually this one's December. There's September, 5.26. December, the same thing. And we don't actually get an expectation of a rate cut really until March-ish of 2024. So the market's now fully taken out any rate cuts for the end of the year, but it's certainly not pricing in 2 rate hikes. They don't believe Jerome. We'll have to find out whether the Fed actually stick to their rules. Let's move over to rules being broken. Old Jerome and his sneaky money print machine. Central banks still coming through here with decent liquidity, though still very extended away from them. Of course, at these points, we need to be quite careful in markets. And you will actually notice, although I just moved it, there was a 43.93 hit of the gap. There was actually a gap over here on the 2-hour on this particular S&P market, and it actually just hit it. Is that a critical resistance? Well, Q's also starting to approach some big wick highs here, very big level. As you can see, even though Fed liquidity, which is the green line here, has been improved in markets recently, still a huge disconnection. That's fine if you're trading long at the moment, but you just need to be cautious about turns. At these points, this is where you tend to get those bigger swing turns. And at this stage, it's still theoretically bullish on the higher timeframes. And we've said that for quite a little while now. Let's move over to treasuries. Treasuries hovering around the 100. None of this massive amount of treasuries coming in. It's just being gobbled up at this stage. Of course, we still do have a whole bunch of more pushing through into the markets. And I think the Fed's kind of backdooring stability in this system at this stage. But of course, treasuries 100, around 98 is actually a key zone for me. Then I've got around that 97, and then a really low level, which would be pretty cool for investors, would be about 86. And I'm sure a few of you are looking at the chart saying, I don't want that to occur. What did copper do? Well, copper came into the supply over here and it sold off after the market closed. So we saw a bit of Jerome selling. And of course, this is, conducive with the idea of demand destruction. We will have to keep in mind that copper may have just turned. So we saw here a high and a low and a lower low, and then we got a higher high. So potentially pullbacks may be worthwhile considering from the buy side. I've been pretty hateful on copper now since January, I guess, of this year. So pretty much 6 months. So far, so good to that. But we will need to watch this because this is the first time it's done a proper switch, and I'll be paying a lot of attention to it. We'll move over to a couple of individual stocks before we get into some discussion on options. Intel continues to churn and burn. This thing is absolutely catching fire. We've really detailed this with the 0 DTE discussion that we've had recently. We saw a huge player come in just about, 48 hours ago. And that huge player is pushing. They're going for the 38.40 range, I would say. So this stock is breaking out. Really nice returns here. And it just shows you there are other opportunities. When we first bought this up, it's up about 26% off the bottom. And although it's not a great investment stock historically, you'd feel pretty safe in it in comparison to some of the others out there at this stage. Just different opportunities. For SoFi traders that took advantage of that one, well done. To me, it's over. This is pretty much the second target I was looking at. First target was 822. Incredible trade I guess overall, just basically a vertical line up. May seem insane, but this is what tends to happen. We, of course, caught this on one of our live streams, and it's been up about 38.92% up to those highs. So again, just a big move. Another one I've been talking about is Piton. That's caught decent fire. I hate Piton quite a lot as a stock, but of course, it is not based anything about the company here. I'm just basing it on hyperactive people generally running to this stock and pushing it near the end of these pushes up. So if we're getting close to the end here, you got to be a bit careful with these stocks. They could drop considerable money in a day. I'm talking 15, 20% in one day, but at the moment, it's getting a little bit of the 0 DTEs. PayPal got downgraded, as we mentioned in the previous video, so it struggled to do what it usually would do, but I would say PayPal and Piton should go theoretically at about the same time, and other ones that generally go around that period are things like Neo and some other stocks. Bit risky though, of course, through those. Disney, pretty disappointing day. Of course, we've been following this on the bull run since that level there. It hit the resistance, kind of got a little bit above, then sold off back into the demand. I'd like to see Disney find bid over the next 24 hours just to hold that demand and find some buyers. In terms of moves to defensives, nothing good here at this stage. So usually before a swing turn, we're looking for defensive moves. There are no defensive moves in the market that are super considered, but we'll look at some rotation that did start up over the last 24 hours. Let's move over to notable options. And notable options was NVIDIA. NVIDIA found big bid. We saw a lot of calls coming through on this one. If we scroll through, it was really semiconductors finding all these last kind of moves here. And some big moves in the semis. Again, weakness here in a lot of the stocks that have been kind of finding all those bids. The Apples, the Microsofts, the Metas, they're weakening. And you can see that with the chart that I showed you at the start of this video, but also by this. I'm interested to see how Target starts trading. That's, of course, potentially deep value. And it had a 3.5% day. A lot of calls coming in this, 5.78 times average volume. Let's now move through some of the major stocks. Here are the put-call ratio spreads between the main ones. Interestingly, the NASDAQ actually still gets lots and lots of puts on it. 64.6% puts. That's a big switch from the last day. Is that some large player getting a huge put in the markets and we just can't see it yet? Let's have a scroll through. Of course, the SPY had all the 0 DTE action on it into the Friday. You can see here the calls, 440, 436, pushing it through. Then we go down. The first Q is actually a put. Then it's a call. So the first Q on our list here today is a put. Then the third one is a put. Then it's a call. Then it's a call. Couple of puts there. Any notables? Not really. There's no long-term puts that we're really seeing here that have been pushing in. But interesting to see the Qs have that big put ratio on it in comparison to the calls. It could be the beginning of something there. First time we've seen that in a little while. Let's move over to the individual stocks. As we mentioned, NVIDIA was getting strong buys. 0 DTEs again at play here. SoFi getting its final 10 strike. That's a big deal. I personally think it's kind of over for that stock getting into that level, but certainly one that was running. Tesla, NVIDIA, KO as well coming out here. And as we scroll through, of course, they were the mains. AMD, most of the same names that we've always seen in these top lists. PLTR getting a little bit of calls, but I think that's kind of topping off. And Intel getting some big positions here. They're not actually short-dated positions either. So this is like the one we saw the other day, the 38. Another strong position here for 40 on Intel. Looks like it's really going for it. Let's move over to expectations now of the economists moving forward on what the Fed's saying. And you've got 64.5% expecting a rate hike now in July. I guess the economists were right and we were wrong, yeah, when it comes to our expectations. If you go to September, we push through to September, you can see they're a bit more confused about what's happening. They think it'll be at 25 basis point hike, about 11% believing in the Fed, I guess, with the 50 basis point. But interesting to see their Fed projection tool. Let's move over to rotation. What's going on in the rotation world? Well, not that much. Basically, it's just semis, XLK. But notice the last 24 hours did have some of the defensives holding up a little bit better. Healthcare was not there, though. But staples, third best, actually fourth best sector after jets on the session, and utilities ending basically flat on the session. If we move over here to the 5-day, it's totally different, of course. Staples, utilities, not really holding up the way you'd want them to. And they're just kind of the middle of the pack. We need to see the defensives move up while we're getting rotational switch. And that's something that I am certainly watching for in this market. Let's move into now some of the other plays as we go into indices. First up is DX, so the Dixie or dollar index. It came into the next level of demand. And we've talked about this gap here. We actually saw a bit of a bid coming through. Little under why. You get 2 new rate hikes. That's going to strengthen the dollar, at least for now, if that is the possibility. So the dollar's kind of believing a little bit in it. I'd like to see it get back up to here and then make some decisions. For anyone that did short, though, off that little area in here off the news from the CPI, you certainly got all of your targets that you could have wanted. So very, very nice 3-target kind of move there. Pretty spectacular. Now, 103.25, this is a key level. We'll be watching that very closely here for the dollar index. And of course, as it strengthens, you have to expect gold to weaken. And today's daily close will be a big one for gold. Huge rejection, nasty looking candle, follow through, Next move down to the 1910s, 1920s, possible here gold. Finally a breakout, obviously looking for the daily close. If you're a gold buyer though, I don't mind this level, this 1910, 1900. So I think it's going to be a pretty strong level to watch for, and we'll be watching it very closely here on the channel. Finally, some moves in those. Oil, boring, still stuck. If you're a buyer, I guess you like it down here, but I'm not too interested in the oil trade at this stage. Just a reminder to everyone that ever calls for a recession, generally you'll never get a recession actually being called until you uninvert on yields. That's US 2-year, 10-year, or 3-month 10-year. We have not seen that yet. Now let's move over to stocks. And of course, Tesla here, a big one. And a lot of you guys love this stock. You actually got, interestingly enough, a gap fill. So if we scroll down here and we go extended trading hours, you'll notice it actually hit 264.99, which is the gap fill. Now, it didn't happen during normal market conditions, but look at that. It just hit that level. I'm telling you, look at that. Oh, damn, right on it. Just smashed into that gap fill. You know, we've had that there for a little while and then sold it off. Now, is that enough to go off? Not really. Do we have a change of trend? Not on a significant time frame. We're going to need to take out 242, 13-ish. And once that gets taken out, of course, you do have the gap up. Let's say we come down, do something like this, then gap below. Ooh, be nice island reversal. Don't try to predict this one. It's still got 0 DTs all over it. It still could go $300. We've just found what I would call a good point for a turn to occur. Apple continues to be lackluster, has not made a new high while the market's been steamrolling ahead. Again, just showing us big stocks are struggling. Microsoft's the same, just kind of floating around at these highs. Double topping, that's certainly something I've seen a few people discussing. A double top often ends the trend. Have we seen it? No. Could we see it? It's a possibility. Another, speaking of double tops, is the DAX. You can see here the topping, the lows. Could we see it? Absolutely. Could this first bust higher and then move down? That would give us a Wyckoff distribution. At this point, the trend is still up and it has not been broken. XJO's found some bid thanks to, I think, the copper bid and also maybe higher interest rates in the US helping out the commodities side of things for now. And you can see here that it's basically just stuffing around on this one. A new low under 70.80 and a close should open up 69.50. And if we get above these highs here, I've marked 7,300 on my charts, then we're probably going long on the Australian market. But it's at a critical level. You can see here, I still probably remain bearish biased at this point. Let's move over to the US 2000 and the major indices. New high coming on down. Weak sector over the last 24 hours. Came to our most trade zone. Then it's come back down. We know where our demand is. Don't be tricked. It's not that one there. It's this thing here. And if that gets taken, that's probably a swing trade, actually, and very interesting depending on how that trades. I'm excited for the next 24 hours, actually next 48 hours, and hopefully you guys are as well. Let's move over to the Qs. Again, so many gap fills below. My goodness. More than I have ever seen, I think, in a rally. So that really shows you mean reversion should be coming. Again, what mean reversion is the reversion to the 20 moving average. Generally, I like to use a weekly one. That's the one that most people use in the industry. Let's move over to the US 500. Actually, we'll use here. We'll go US 100 first. Yep, US 100 futures. New high formed. Interesting how it found this level. So we talked about potentially some weakness here. You would have lost that short that you made a place there with this bit of before the news. Then it sold off, which would have looked frustrating. Then it rallied straight back up. Clearly, we have the demand zone now, which is good because we'll know if swing trades are potentially being activated to the short end. Very hard to stop this freight train. And at this stage, it obviously came up after Jerome Powell's speech, which is pretty normal. Then we usually get a slide after that one. SPX filled the gap. Cool. That's pretty cool. So we can close that one now in terms of where it did. It hit the gap. It's actually extended very quickly here. So the SPX has been on an extreme move. It obviously sliced that extreme zone. Number 2, didn't even get a turn there. We've found the top, which is the top of the golden pocket. We've hit the gap. The NASDAQ's actually at better resistance than the S&P, and I'm not discounting the idea that we could get into something around the 45.50s. It is possible if this trend wants to keep extending. You have to expect the unexpected, But let's take a look at after Jerome. So a few people in our private community were angry about this because they were like, why didn't we take the lows? Yeah, I agree with you guys. It would have been nice. So we didn't take the low. We found that. That's clearly the demand. We did instigate potentially a first style or first time frame change of trend. Technically, you'd be in on that and short, and at this stage, slightly up on the short. Again, because you're counter trending, it's a very tough trade. You only win around 50% of them, so you have to make them pay pretty hard, and you've also got to get good break-even levels in. So at this point, it does look weaker than it looks strong on the small time frames, such as the 15-minute. If we get a new high, though, it could go blitzing, and it might even put another 100 points on. So you've got to be really careful about this. No swing trade, no change of trend, but we do know where the big wicks are. This was the initial purchase. Look at that buy the dip, reflex going in the market. You can really see the power of this little red box level here. And I'm waiting, I'm watching, certainly very interested in the next 48 hours. And the reason why we're so interested has to do with maximum pain. So of course we know options are expiring, 5.5 basically million of them, trillions of dollars at stake here, and realistically a maximum pain that's still very low in comparison to the current price. So it's sitting at 415. We're sitting at 437 at the time of recording. That opens the game 2 shorts coming through here. It hasn't worked the last 2 months during OPEX. Before that, it's been pretty efficient. So again, if we see the activation, the right signs, it's possible. Do not ever use one reason to be in anything. But you can see here the calls are coming through. Obviously, there's some exciting levels, 420, 410, 430. All of these are certainly points that you could see the market gravitate towards. It's hard to see the market wanting a higher point at this stage, but again, anything can happen. Price action is still bullish. Let's move over to Bitcoin. Now, this is where weaknesses come in. Bitcoin's actually doing the right dance, and that dance is down. So it's moving into that 24,000 that we've been talking about for a while. Pretty big daily close, new low. Certainly looks weak. Rallies you would think are being met by sell demand. If it does take out, let's say up here, then it's going to reverse and probably look towards the bull end. But it's reflecting really 2 things. Firstly, of course, they're getting, the whole market is getting a lot of FUD on it. So there's a lot of problems there. But I think the second thing that's really interesting is that we've got weakness here in what is technically usually running with growth stocks. Bitcoin's just not doing that. It looks weak. I think 24.2 is certainly possible here. We've been angling for this for like a month and a half. So yeah, it's finally coming down, which is kind of a good sign. If you're looking ahead for the news here, you can see that you've got a little bit of news still coming through. Retail sales, core retail sales coming 8:30 a.m. June 15th. That might be pretty important. Then you have ECB and Bank of Japan and the prelim UOM consumer sentiment at 10 a.m. New York time on Friday. So still a lot of news to go this week, but now the focus turns to options. And more importantly, when the VIX hedges are off, can we actually see a spike in volatility? This is a hugely hedged week, the most hedged week of 2023 left. And at this stage, when they expire, it opens up the floodgates for some volatility to come back into the market. Generally, you won't be able to see it. Now, remember, Thursday action is usually the more volatile day than Friday in these OPEX weeks. So that's what we're going into. If you enjoyed today's video, make sure to subscribe, smash that like button. Massive shout out to each and every one of you that does thumb up the video and enjoys the content and posts the comments and all those types of things. If you want to get more involved, of course, there are some free cheat sheets. You can join us on socials. And of course, if you're interested in day trading or anything else that we offer, you can jump over to fxevolution.com. Thanks so much, guys. We'll see you in the next one. Bye for now.